What if I told you a single stock offering just changed the entire economic landscape of East Africa? This is Kenya News Update today. Coming up, you'll discover how a state-owned pipeline company became a public sensation, why investors fought over 12.4 billion shares, and what this means for the future of energy and money in our region. Meet the Kenya Pipeline Company. For decades, it was a quiet government asset. But on March 4, 2026, Treasury CS John Badi dropped a bombshell. The IPO was oversubscribed by 5.7%. Investors applied for more than 12.4 billion shares, but only 11.8 billion were available. That's a 105.7% subscription rate. A resounding vote of confidence, Badi called it. But here's the twist. The government is refusing to take the extra money. They're sticking to their target of SH-106, 3 billion, and sending the rest back. Why would they leave cash on the table? The answer reveals a bigger game. This isn't just about listing a company, it's about creating a regional energy powerhouse. And then, something shocking happened. The ownership structure of a critical national asset was completely rewritten overnight. The government keeps 35%, but the rest? Local institutions like pension funds and banks now hold the biggest private slice at 40.99%. Our regional neighbors, Uganda and Rwanda, secured a major stake of 21.22%. The Kenyan public? Individual retail investors own 2.6%. But here's the part that will blow your mind. Over 70,000 everyday Kenyans bought in during the offer period that ran from January 19 to February 24. This wasn't just for the big banks, it was for the people. And then, the real strategy emerged. Badi explained this move gives KPC the flexibility to access capital for expansion, to improve storage, to develop its oil refinery, to cater to increased demand across East Africa. This pipeline company is now positioned to take on a major geopolitical role. It will leverage its strategic location and network to drive influence. But here's what nobody's talking about. The tiny fractions. KPC employees hold just 0.06%, oil marketers own 0.014%, and global investors? A minuscule 0.02%. This is a Kenyan and East African story first. The shares were divided to ensure a broad base. Kenyan investors got the largest portion, over 7.9 billion shares, roughly 67.32%. East African community investors took over 3.8 billion shares, accounting for 32.65%. So what does this all mean? Some say this is a masterstroke of privatization, unlocking value and regional cooperation. Others might ask if selling stakes in critical infrastructure is a risk. The tension is clear: fiscal discipline versus the temptation of extra funds. The government chose discipline. They took only what they targeted. The extra money for the oversubscribed 5.7%, it gets returned to investors starting this Friday. But the bigger, unanswered question remains. Can this newly public KPC truly become the regional energy kingpin it's designed to be? Will this model be replicated for other state corporations? The IPO is done. The shares are distributed. But the real story of Kenya's economic ambition is just beginning. Do you think this IPO is a brilliant move for Kenya's future or a risky gamble with national assets? Drop your take in the comments. Subscribe to Kenya News Update today for more breaking news on Kenya's economy.